Please start.
Sure. So, we are gathered here today for Golden Charcha, a visionary initiative conceptualized by CA Vishnu Kumar Tulsian, the esteemed chairman of EIRC. Golden Charcha stands as a platform dedicated to enrich professional knowledge, fostering intellectual discussion, and promoting continuous learning among members of the accounting fraternity. I would like our chairman to speak a few words. Over to you, sir.
Thank you so much for giving me the opportunity to speak before all of you. Friends, first of all, festive seasons, and hope you all enjoyed the Durga Puja and Pandal hopping in this season. And after this, we also be enjoying the Deepavali and Chhat Puja. So, greetings of the day to come. Secondly, the objective of this Golden Chacha has been to promote and give the opportunity to the young chartered accountant so that their hesitations and their fear to speak before the public could be reduced or can be mitigated. Hence, we started this initiative so that the chartered account from village to multiple city and to the metro city, it can be given the opportunity. And I'm getting very good success of this program. So I'm so happy that my Eastern India can be given a good opportunity and we can create a talent pool from our regions. The topic is very important, and our speakers, I am very much obliged to them. They consented to be one of the speaker and coordinator and special address. All three, I am obliged to them, and hope the interactions will be very much successful and very much enriching to all of you. With these remarks, topic is very relevant, and we are going to hold Golden Jubilee Conference in the month of November next month on 21-22nd. If anybody has not registered till now, please register, don't miss it. It will be an enriching experience, and with the support of all of you, we can create a good impact on the entire country that yes, ERC is capable and they can do anything if they want. With these comments, thank you so much for giving opportunity back to coordinator to take the program ahead. Thank you so much.
Thank you, sir. So, our topic for today is GST recent amendments. Today, we have with us a special addressee, CA Payal Daruka. I would like her to speak a few words about those topic. Over to you, ma'am. Ma'am, you're not audible.
Am I audible now?
Yes, it's a little bit better.
Okay. Thank you, Rashi ji.
Thank you, ma'am.
Thank you, Vishnu Tulshan ji, for giving me this opportunity. Golden Charcha is a very good initiative taken up by our chairman, Vishnu Tulshan ji, through which we get a platform to discuss on various topics and enrich our professional skill and knowledge. Today's Charcha is about a significant update in our nation's taxation system, that is a recent amendment in GST. As we all know, GST was introduced in July 2017. Since then, several amendments have been made to improve the structure, plug loopholes, and ensure better compliance. Now we are entering the next phase, GST 2.0, to bring simplification, digitization, transparency, and better compliance. Now, the new GST regime intends to simplify the tax structure by decreasing the slabs and changing the rates. The shift to a two-slab system of 5% and 18%, removing the earlier 12% and 28% rates, it will make taxation more transparent and easier to follow. There is also a 40% rate on luxury and sin goods, such as pan masala, tobacco, etc., to ensure fairness and revenue balance. In coming days, registration and return filing have been simplified, refunds made easier, and compliance costs are reduced, easing the burden on businesses, especially MSMEs and startups. Biometric-based Aadhaar authentication for GST registration will be introduced to curb fake invoicing and fraudulent input tax credit claims. AI-based risk management systems are introduced to detect tax evasion and other anomalies. So likewise, GST 2.0 brought various reforms to directly benefit the common man, farmers, MSMEs, and middle class families, and strengthening India's long-term growth. While GST 1.0 was more focused on implementation, GST 2.0 is more robust and predictive and future ready. As we navigate these changes, today's Charcha with CA Praveen Surana ji will help us to better understand the impact of the amendments in GST. Thank you, Rashi ji, and over to you.
Thank you, ma'am, for such a nice introduction of the topic. It's my pleasure to introduce Mr. Praveen Kumar Surana, a distinguished professional with qualifications spanning commerce, law, finance, and valuation. He's a chartered accountant with additional credentials including DISA, FAFD, MBA in finance, LLB, LLM, and is also a registered valuer in securities and financial assets under IBBI. With over 14 years of diverse experience in taxation, accounting, auditing, valuation, inspection, and investigation, he has worked with reputed organizations such as DB Desai, Hari Bhakti and Company, Dunlop India. Mr. Surana is also a visiting faculty with ICWAI and has conducted numerous knowledge sessions for ICSI, ICAI, and ICWAI. Beyond his professional excellence, he is a certified social auditor and Vishard in astrology, guiding over 7,500 individuals through his astrological insights. We are honored to have him with us today to share his expert and experiences. Over to you, sir.
Well, thank you, Rashi, and thank you, Vishnuji, for giving me this opportunity to speak about this vibrant topic, GST recent changes. And thanks, Payal ji, also who has given a brief idea about the changes in GST 2.0 and what would be the impact in near future. So, coming back to the today's topic about GST recent changes. Uh, Yeah, Rasik, I'm unable to share my PPT into this.
Just a second, sir. I'll just check. So have you joined as a coordinator, right?
Yes, yes.
Just a second.
Or should I start without?
So you can start without the PPT once. I'll just
Okay,
let you know what's the
okay.
problem. Yeah.
So, friends, uh, it's actually tax audit, ROC related activities, and so much activities for all the professionals, working professionals practicing. Okay, so taking out time for listening this recent GST recent changes, it's also a commendable job. Okay, so let's start with what are the major changes which has happened and which has impact on day-to-day activities. And as a professional, we should understand or we should have that idea about what exact the changes has been made. So it took actually 8 years for the GST Appellate Tribunal to finally start functioning, and that too with the intervention of the Supreme Court. So as a result, the central government has to rewrite the provisions and amend the CGST Act in line with Supreme Court guidelines, because GST is jointly managed by the center and the states. Reaching an agreement on the tribunal structure, location of the benches, and jurisdictions took considerable time. And in very short period of time, the first, I would say that high profile order by the uh, Goods and Services Appellate Tribunal regarding anti-profiteering case, which was between the DGAP versus Urban Essence. And in this case, I would like to give a brief idea about that. The tribunal upheld a recovery of 5.47 lakhs along with 18% interest against a restaurant franchisee for failing to pass the benefit of a GST rate cut from 18 to 5%. So to give a brief idea about what exactly the first order was telling about, and we are into GST 2.0, where a plethora of changes has been made with the rates. So as we all we know that 18% and 28%, sorry, 12 and 28% is no more, and it has been reduced from, if it is 12%, it has been reduced to 5%, or it is, if it has been 28%, it has reduced to 18%. Okay, and a maximum rate of 40% was charged into some of the items to make balance of the balance of the revenue, which will be reduced by the change, or by the rate cut of 28 to 18, or 12 to 5. So the first major impact what will be coming out will be anti-profiteering, because as soon as we have understood that there is a rate cut from 28 to 18 or 12 to 5, so to cope up with that, or to make such changes into the pricing, that is also more important. And and there are many in the business who are reluctant, and who are reluctant to make such changes into the pricing, and that actually affects the consumers. Okay, so anti-profiteering is just like that. If the government has imposed, or if government has suggested for a change in rate or reduce some rate, so that accordingly the pricing of the product has to be changed just because of the change of the rates. So Section 171 of the Central CGST Act 2070 contains the anti-profiteering measures, a provision designed to protect consumers. So it mandates that businessmen must pass on the benefit of any reduction in the GST rate or the benefit of the ITC to their customer through a commensurate reduction in prices. And the willful failure to do so is considering profiteering. So the mechanism and the authorities who are looking after all these things is DGAP, that is Director General of Anti-Profiteering, and the function is to investigate the complaints of the profiteering. See, when consumers are going into the market, by listening that, yes, in this 56 GST Council meeting, there is plethora of changes has been made in the rates, and the items which are in regular use and by the common people, that has been taken very good care of by the government, by the GST Council, and the rates which were changed, that will impact a lot to the common people, because that also give relaxation to their pocket also, because out of their pocket they are paying hectic taxes, and with the reduction of the prices, with the reduction of the tax rate, it will give a boost to them also, because now they will be paying lesser than what they are paying earlier. So this investigation department by DGAP will investigate the complaint of the profiteering, and then GST Appellate Tribunal, earlier it was NEE, decides whether the company has failed to pass on the benefits. Now, if we can come across with the name this NEE, which was National Anti-Profiteering Authority. So earlier, when this this whole arrangement was not done, it was taken very good care by the National Anti-Profiteering Authority, and it was eventually disbanded after this enactment, or after this Supreme Court order for again redrafting the rules and all that. So October 1st, 2024 was the date where National Anti-Profiteering Authority was eventually disbanded. And the end of the new investigation was April 1st, 2025, because thereafter no new anti-profiteering complaints was accepted. Okay. So going back to this if anything goes with anti-profiteering, then it was taken very good. It has taken very good care by Director General of Anti-Profiteering, and then GST Appellate Tribunal decides whether the company has failed to pass on benefits. Then, if anything identified, I have spoken that first order was passed, and those payment was those benefit which was not given to the consumers were transferred to consumer consumer welfare account. So receives any recovered profiteering amount if customers can't be directly compensated. Say suppose if it was in general market, if the rate was not reduced and it was provided to n number of customers, so it is very much difficult to identify each and everybody and to pass on the benefits to the customers. So for the sake of the benefit of the customers, it was decided that it will be transferred to the consumer welfare fund. Now it's now the key legal and normative principle that is applied is that the tribunal allowed examining all goods and services under a GST registration when a rate cut benefit was not passed. So board scope was anti-profiteering was that if tribunal has allowed examining all goods and services under a GST registration and when a rate cut was not passed, so it will be a preventive selective evasion. And even if cost went up, a business cannot avoid passing rate cut benefits by citing cost increases blindly. So which is happening every now and then when there is a rate cut or when there is a revise of the tax rate. So if MRP is, say, suppose 140, which is inclusive of GST, if there will be a reduction of 5% of the GST tax rate, it has to be come down, the rate has to be come down up to an extent of 5%. But what the manufacturer is doing is that they are increasing their taxable value so that it will cop up and MRP remain the same. So the reduction of the tax, the reduction of the tax amount, which has to be transferred to the consumers, it is exactly not going to their hands. It is directly they are just hiking the rates or some change in the packaging. They are controlling the pricing and accordingly they are not transferring the benefits which has to be transferred to the consumers. So rejection of the cost escalation defense. Again, impose 18% interest on the profiteering amount and mandated deposit into consumer welfare fund, emphasis consumer protection. So after this, some sort of arrangement or the intervention of the departments, now this this profiteering which is being kept by the manufacturer or the traders, now it has to be transferred to the consumer fund. So it's a very welcome step, and now department is very active, and all those application which is coming for this anti-profiteering prospects, and department is taking action onto that. So if we go with the hierarchy part, so at first the adjudicating authority which is looking after the case, and then when first appeal was if we have done, if anybody in the if anybody is there who is looking after this appeal and all that, so they must have filed the appeal under section 107. Now this second appeal has to be filed as under section 109, which is GST Appellate Tribunal. If there also they are not getting relief, then further can be appealed to High Court and Supreme Court. So I would like to now add one point, is that there was a circular number 212/6/2024 issued on 26th of June 2024 regarding section 15(3)(b)(2), which is just the value, taxable value part. If section 15 is the evaluation of the taxable value. Okay, so if there is any discount provided earlier, so that has that was required to disclose the supporting for that, if any discount further applied for that. So this section relates to discounts given after supply, specifically how suppliers can prove that such discounts are pre-agreed and linked to invoices to allow reduction in taxable value. So now this circular is now being withdrawn by CBIC on 1st of October 2025. This means that the procedure earlier prescribed for providing evidence of compliance with section 15(3)(b)(2) is no longer required. So the calculation of the taxable value, earlier it was like that if any discount further given after discount after supply was recorded and it was deducted from the taxable value through a credit note and to that, and tax was to reversed. Now this entire part was required to be examined and supporting was required to be produced. Now with this circular, it is now removed. So the withdrawal aims to ensure uniform implementation of the GST law across all field formation. Now, as we all know, GST Council meeting 56, there we identified that a plethora of changes has been made regarding taxes. So one of that was the changes in the GST rate on service and goods other than cigarettes, chewing tobacco, products like Jarda, unmanufactured tobacco, and BD. So we are of the view that there is a rate now 5, 18, and 40. But with this line, we can understand that still there is 28% lying, because the changes in GST rate and service and goods other than cigarette chewing. That means what? Cigarette chewing tobacco products like Jarda, unmanufactured tobacco, and BD will still. I mean to say the taxes will still remain the same. Other than that, the other changes which were made in 56 GST Council meeting, that will be effective from 22nd of September 2025. So this is very alarming that if we are of the view that the entire thing, changes which were made has been effective from 22nd September, the answer is big no. Because cigarette, chewing tobacco, product like Jarda, manufacturing tobacco, and BD, the date will be announced near future, but it is not effective from 22nd September 2025. Again, in the case of the there is a very confusion going around. What would be the tax rate applicable where if supply is made after 22nd of September, where amount has been received, but goods has to be transferred after 22nd and payment to be received after 22nd September. So as per time of supply provisions, as per section 14, it clearly states that if amount has been received and goods has been transferred, if invoice to be raised after 22nd September, the rate applicable will be the before 22nd September 2025. But if goods has been supplied, amount has been received after 22nd and invoice raised after 22nd September 2025, then new rate will be applicable, and the invoice which will be prepared in that case, new rate has to be charged as per the rate announced in 56 GST Council meeting. So a clarification is also made into that through a notification that if anything which is supplied after 22nd September, and if these criteria is fulfilled, then accordingly the rate has to be charged. Now the thing is that many of the taxpayer was was in a confusion whether the product or the purchases or the invoice which they have received earlier to 22nd September. So the ITC credit which is there in their electronic credit ledger, whether they have to reverse that ITC credit or not. So in a broader sense, Section 49 clearly states what will be the scenario where which we have to consider, and accordingly we have to act accordingly. If after 22nd of September outward supply is entirely exempted, then in such case whatever the inputs are lying in electronic credit ledger, that has to be reversed. If some of the product is exempted, or if and other products are, the tax rate has been reduced from 12 to 5 or 28 to 18, in such scenario that ITC credit can be utilized for the payment of those taxes. In later on, further provisions are also being explained by in 56 GST Council meeting, where which there's inverted duty structure rate where the credits are at 18 or 40%, but their outward supply is 5%. In such scenario, where ITC credit will be there in their electronic credit ledger, in such case, the excess credit which is lying in electronic credit ledger can be claimed as refund under inverted duty structure. So one of the point, my outward supply is exempt under new rate schedule, but I already have ITC of GST paid in my ledger. Will I need to reverse ITC? So it's a common question. So the ITC can be utilized to discharge outward liability for supplies of goods or services or both made till 21st September 2020-25. However, for supplies made on or after 22nd September, when the rate change is affected, ITC will have to reverse as per the provision of the CGST Act. So one another question which is asked was, will I be allowed to take refund of accumulated credit arising out of inverted duty structure for supply affected up to the date of effect of revised rate as notified? Same for medical devices also. So in such case, where the outward rate of tax is lesser than what the ITC which the manufacturer or the registered tax person is considering, or inverted duty under inverted duty structure, they can take the benefit of refund. So they can apply for the refund. And in such cases, a clarification has been provided in circular number 135/05 2020, that which states that refund of accumulated ITC in terms of clause 2 of first proviso to section 54(3) of the CGST Act is available when the credit has accumulated on account of rate of tax on inputs being higher than the rate of tax on output supplies. However, the input and output being the same in such cases, though attracting different tax rate at different points in the time, do not get covered under the provision of the clause 2 of the first provision. When the rates, both the inverted duty, when the inward ITC credit which you are getting as 18% and outward is also 18%, in such scenario, the credit which is lying over there cannot be claimed under inverted duty structure. It has to be, if the rate is different, then only we can go for that inverted duty structure refund under the inverted duty structure. One another question is being also there. Why is refund of inverted duty structure on imitation jari made out of metallic plastic foam? It is a very specific question which is being examined by the GST Council, and in a FAQ it has been explained there that the plastic film restricted while there is no other restriction on refund on other textile product made from plastic or rubber. So the clarification provided was that the decision to restrict ITC on the plastic polyester film in imitation jerry was taken in the 56th GST Council meeting. The focus of the GST rate rationalization exercise has been to streamline GST rate. So for that reason, the inverted duty structure on imitation jewelry made out of metallized plastic film was restricted. In an FAQ and in the press release for 56 GST Council, it was top of the list that ultra high temperature milk has been exempted. So in a FAQ, it was explained, does exemption to ultra high temperature milk also cover plant-based milk? So it has been clarified that all type of dairy products other than ultra high temperature milk were already exempt from GST. Ultra high temperature milk has been exempted to provide same tax treatment to similar good. But that plant-based milk drink, except soya milk drinks, attracted 18%. So that has been reduced to 5%. This again for carbonated beverage of fruit drink or carbonated beverages with fruit juice has been increased. So there is a explanation given for the why there is a change, why there is an increase in tax rate. These goods attracted compensation cess. Earlier, in the before 22nd September, there was a compensation cess into this. So with this 56 GST Council meeting, proposed for the to remove the compensation cess and to make a parity for that, so that there will not be a loss in revenue of tax collection. So it has been decided to compensate cess levy. The tax has been increased to maintain the pre-rate rationalization level of tax. One very important FAQ, which I want to make emphasis into that, will the e-way has been cancelled, will have to be cancelled and generated affairs on goods in transit when the new rate come into effect. Suppose on 21st e-way has been generated. So there is a movement of the goods from 22nd onwards, and it reaches to the recipient on 23rd or on 24th. So in between that, the rate has been changed, it has been reduced, or it may have been enhanced. So in such scenario, department has clarified under Rule 138 that the e-way bill is to be generated before if the e-way bill has been generated before the start of the supply of transport of goods, there is no mandatory requirement for cancellation and fresh generation of e-way bill for goods in transit when the new rates come into effect. The section 14 will be applicable because it's just a movement of the goods has been taken care through e-way bill. So there will be a track record of whether the movement of the goods is being done or not. Regarding the pricing and regarding the tax rate, it will be covered under section 14 only. There is so much of changes being made in related to two-wheeler, three-wheeler, motor vehicle, ambulance, lorries, trucks, trailers, semi-trailers, trailers, that has been reduced from 28 to 18%. But if the vehicle exceeding 1500 cc or length exceeding 4000 mm, in such scenario, there will be a highest tax rate of 40%. So it has been simplified that GST rate on all mid-size and large cars, vehicle exceeding 1500 cc or length exceeding 4000 mm is 40%. Rest, it all will fall under the rate of 18%. Even in the case of the three-wheelers also classified under HSN 8703, under the FAQ, it has been clarified that the reduced from 18% to 18%. Again, the motorcycle engine capacity up to 350cc attract a GST rate of 18%, but motorcycle of engine capacity exceeding 350cc attract a GST rate of 14%, 40%. So it has now been clarified that if your vehicle is, if your vehicle or any of car, motor vehicle, ambulance, lorry, if it is under 1500cc and length is not exceeding 4000 mm, the rate will be straight away 18%. If it is exceeding that, the rate will be 40%. And for the motor vehicle, if it is below 350cc, then rate will be 18%. And if it is in excess of 350cc, then rate will be 40%. Very good FAQ, and department has given clarification to that. Why GST not been removed on raw cotton? Currently, cotton attracts GST on reverse charge basis. And this means that agriculturists do not have to pay GST when they supply raw cotton. The reason for taxation cotton in GST is to avoid breakage in input credit chain, and the GST paid on cotton is available as ITC for the textile industry. This will ultimately benefit the consumers also. So again, a very good, you can say that agriculture, to promote agricultural and agricultural activity, this GST reverse charge on GST on raw cotton has not been removed yet and not been reduced or taken any changes into that. Again, very good FAQ against the release of changes in 56 GST Council meeting was that what is the new GST rate on toilet. That is very, you can say, very kidding like of activities which has been explained, whether why there is a rate cut in toilet soap paper rather than in liquid soap. So after reading this, I was in a view that why this discrimination has been done. So I was of the mind also that earlier in 52nd GST Council meeting, 52nd GST Council meeting, where we have heard from FM that if there will be a sweet in popcorn, then there will be a rate will be different that other than the normal popcorn. Same like that, if there is a toilet soap bar, then rate will be reduced to 5%. And if it is liquid soap and soap, and if it is a liquid soap, then there will be a no change in the tax rate. So their department have also given the explanation for that, that new GST rate on toilet soap is 5%, intended to lower the monthly expenditure for the lower middle class and poor section. So my question is that very, very less people are using toilet soap nowadays rather than using liquid soap and all that. And even in 10 rupees also, we are getting from different companies, they have already introduced products of 10 rupees where we add liquid into that and it will convert into liquid soap. So my question will be that what will be the rate charge for a powder packed packet where liquid will be added and it will turn up into a liquid soap? So what will be the rate then? And what department is looking after for that? So again, coming back to this next topic, that is earlier that marble and travanite blocks and granite blocks attracted GST rate of 12%. So there was a nature of intermediary goods, and GST rate on these goods has been reduced to 5%. So marble and travanite blocks and granite blocks attracted 12%. Now it is reduced to 5%. Now spectacles and goggles for correcting vision now attracts 5%. And you will find a very different view that if spectacles and goggles are taken not for a vision, but for other reasons, then in that case, the GST rate will be 18%. So a sunglasses taken by you, which is not for correcting vision, then it will be 18%. And if spectacles and goggles taken for correcting vision, it will be 5%. So I'm of the view that I have taken a sunglasses, and that glass I have converted with power into that, so that correcting vision with sunglass, with a sun protection. So in that case, what would be the rate charge in such scenario? If it will it be 5% or will it be 18%? So answer is a big question mark over there. Let department uh, let department handle this issue also, because correcting vision, plain glass 5%, sunglasses is there, and correcting vision is not there, or power is not there, then 18%. So I found bit confusion into this also. So again, next, lithium ion battery, earlier it attracts 18% GST, but other batteries attracted 28% GST. Now all batteries are under heading 8507 will be uniformly taxed under 18%. So there is no confusion around whether lithium ion batteries or other batteries. All batteries under heading 8507 will now be taxed under 18%. So this is a again discussing about this air conditioned dishwashers and other, the welcome move from the GST department, because July 1st, 2017, it was a, you can say, a biggest tax reform. So this reform on in 56th GST council meeting, it is not, you can say, it's not like that. It is also a very good tax reform from the GST council point of view, because after these changes, it has actually impacted a lot of consumers. So GST on air conditioner and dishwashers, it rate was cut from 28% to, rate has been cut from 28% to 18%. So earlier TV and monitors up to 32-inch attracted 18% GST, while larger TV and monitor attract 28%. Now all TV, whether it will be whether it be 32, 55 or anything, it will be uniformly taxed to 18%. So a uniform tax rate has been implied in TV and all that, and air condition is also and dishwasher also be reduced from 28 to 18%. Again, after looking after all these changes, one thing will come into your mind: how the stock lying in the shop, the rate, how the rate can be changed, or MRP level, or you can say the MRP which was earlier printed onto that, how it can be changed so so easily, or with such change within very short period of time, how can it be changed? So again, a clarification has been provided. The National Pharmaceuticals Pricing Authority, because in medicine, it is very much difficult for taking one and all the strips and making such changes, or making printing or relabeling the MRP on all the strips or all the bottles, medicines bottles and all that. So it will be a Herculean task for the person who is handling this, or the shopkeepers or the retailers and the distributors, super stockists. It will be very difficult for them to make all changes to the MRP in all the products. So the National Pharmaceutical Pricing Authority, by this notification 12/9/2025 and 13/9/2000, have clarified the following: that all manufacturers, marketing companies selling drugs formulations shall revise the maximum retail price of the drugs formulation. Why? How? The manufacturer, marketing company shall issue revised price list or supplementary price list in Form 5 and 6 to the dealers and retailers for display to consumers and to state drug controllers and the government, reflecting the revised GST rate and revised MRP. Meaning thereby, when you will be going to any shop, a medicine shop, to buy any medicine, now in such scenario, if you can say to the shopkeeper, show me the revised rate list, then he is bound to provide you the supplementary price list in Form 5 and 6. And after reading that, you can identify that, yes, the MRP which was earlier mentioned in the strip or bottle, it is now reduced to the extent which is reduced. The tax has been reduced. So it is again a relaxation given to all the shopkeepers or retailers, distributors, super stockists for making such changes. So after providing all these information only, there is no need of recalling, relabeling, or resticking on the label of the container or the pack of stock released in the market prior to 22nd September 2025. So it is now not mandatory. If manufacturer or marketing companies are able to ensure price compliance at the retailer's level. So if I am going there, if I am satisfied with the latest supplementary price list in Form 5 and 6, and where the rate is mentioned over there, and after after clarifying or after checking each and everything, if I am satisfied, then there is no need of relabeling or resticking. So it has been clarified on very 12th of September and 13th of September with the circulars. Now again, government is very much focused on drones and all that, because India is now promoting drone activities, because since drone will be there, now transportation of the goods or transportation of anything or taking any such information through drones, it will be now easier for the consumer who is using that. So earlier it was that the unmanned aircraft drone attracted 5%, and other than that 18 and 28% GST rate. So 56 GST Council meeting has recommended 5% GST on drone. So a uniform rate has been applied on all the drones. Whether the 5% GST rate will, I mean to say that the question always come up, was always there when it was announced in 56 GST Council meeting that drone rate has been reduced to 5%. So now it has been clarified that uniform GST rate 5% on all the drones will be applicable. Again, so much of confusion related to sand lime bricks, because it was announced in 56 GST Council meeting that the rate has been reduced. So earlier, I would now like to put emphasis on exact what was the rate earlier to all the bricks. A special composition scheme was applied on supply of the bricks. Okay. So it was implemented on 1st April 2022 based on the report of the group of the Minister on capacity-based taxation and special composition scheme, which was accepted by GST Council meeting in 45th GST Council meeting, which was held on 17th of September. So it was like that key composition under the scheme bricks attracts GST of 6% only without ITC, but 12% will be if it is charged 12%, then ITC will be then there will be an ITC. The supplier can take the ITC credit, or the recipient can take the ITC credit up to that. With the threshold limit of the bricks is 20 lakhs instead of 40 lakhs, because in goods we know that threshold limit is 40 lakhs, but for this particular item, the threshold limit was 20 lakhs. Now the GST Council in 56 GST meeting held on 3rd September recommended the change in the special I mean to say they have not recommended any change to the special composition scheme. That means that 6% is still allowed without ITC. Okay. But on sand lime bricks, on which GST rate has been recommended to reduce from 12% to 5%, it is clarified that out of the all bricks, sand lime bricks will be 5%. Okay, earlier if it is under this under the special tax scheme of 6%, so and some of the supplier being charging 12%, now they can go for 5% with that. Hence, All kinds of bricks except sand lime bricks continue to attract 6% without ITC and 12% with ITC with a threshold limit of 20 lakhs. So the three categories has been there. All bricks special scheme 6% without ITC. All bricks except sand lime 12% with ITC. If it is a sand lime, then it will attract 5% and threshold will be 20 lakhs. So again, a question arises, what would happen to the person who is doing job work services in relation to those bricks that will attract GST 5%? So in such scenario, job work services in relation to those bricks which attract 5%, taxable will be, their services will also be taxable at 5% with ITC. In 56 GST Council meeting, one of the announcement was very limelighted was hotel accommodation scheme, where it was announced that it was proposed that the supplier of hotel accommodation services where the value of unit of accommodation is less than or equal to 7,500 per unit per day shall have to charge GST 5% without ITC. So there was a dilemma into that if they continue charging 18%, then whether they can take the ITC credit or not. So GST Council has made it has been clarified from the GST Council through FAQ that it is mandatory that rate prescribed for such services and the option to pay GST at the rate of 18% with ITC is not available for such unit. So you have that hotel accommodation services provider has to charge, if they are charging below 7,500, the rate will be 5% without ITC. They cannot change the rate to 5% to 18% and take the ITC credit. So it has been made very much clear that there will not be any shifting of the rate from 5 to 18, because once it is announced for 5% without ITC. So their accommodation services rate is 7,000. If it is below 7,500 per unit per day, then rate will be 5% without ITC. Now, multimodal transport of the goods. There was a confusion when it was announced, it was proposed in 50 GST Council meeting how the multimodal transport of goods will attract GST. So the multimodal transport of goods, that means that it will be transported through air also and through other means also. But if it is through air, then rate will be charged at 18%, and if it is other than air mode, then the rate will be 5%. So again, a consolidated view has been provided, or in FAQ it has been explained by the GST department, is that 5% with restricted ITC allowed only on ITC input services of transportation of goods limited to 5% of the value when no leg of transport of goods is by air. Thereby, 5% will be restricted ITC credit. ITC allowed only on input services of transportation of goods limited to 5%. It means that if it is there is one another leg for transport of goods is by air, in such scenario, then it will be restricted. Again, 18% with full input tax credit when at least one leg of the transport is by air. So I can explain it through an example which is also explained, which has been also provided by the GST Council in the FAQ. For example, A engaged B for multimodal transporter for transport of the goods from New Delhi to Gaya for rupees 1,200 without involving any transportation through air. B hires GTA services to B hires one of the GTA services C for 600 who charges tax at 18% and container transport operator D for 400 who charges rate at 5%. So in such scenario, now they have clarified that ITC, how they can take ITC. So ITC GTA for B, which is which has taken services from GTAC, which has charged 18%, it has to be reduced to 5% only, because 18% they cannot be that B will not be allowed to take ITC credit of 18%. B will be allowed only for taking ITC credit of 5% only. And for the carriage container transport operator, which he charged 5% only, that 5% is available to him. So in such scenario, it has been made very much clear that even if 18% is charged and invoiced to him, allowable will be 5% only. So now we as an auditor, we as a chartered accountant, if we are handling their cases or their monthly returns and all that, so we have to take very much good care of all these things if we are handling these type of clients. Now again, a very important discussion which was announced, very much important point which is announced in 56 GST Council meeting. Nowadays we often use these services on a random basis. How? That if we have to provide any such sort of document, instead of using own peon or office boy, we generally use Swiggy and Porter and all that, where locally they can deliver our uh, uh, any kind of say office papers or anything which we require to be delivered on instant basis without involving our office peon and office staff and all that. In such scenario, it has been clear that good transport agency will not include electronic commerce operator by whom the service of local delivery is provided, and electronic commerce operator through which the service of the local delivery are provided. In light of this, in relation to this, one explanation being provided by the GST in a FAQ, the service by way of local delivery provided through an e-commerce operator where the person supplies such services is not liable to register under section 22(1). So suppose if we are taking any services through a e-commerce operator and where our activities get involved into this, so in such scenario, there is a provision to take registration under GST. But here it has been very much clear that it is out from GTA. So if it is out from GTA, not liable to register under 22(1). It will be covered under section. It will be covered under section 9(5) of the 9 clause 5 of the CGST Act. In such cases, the liability to pay GST will be under the e-commerce operator only. So further, it has been explained that if such services of local delivery are supplied directly by a registered person, 18% GST will be charged. And if such services of local delivery are supplied through e-commerce operator by a person who is not liable to be registered, GST at the rate 18% payable by the e-commerce operator under section 9(5). So myself is doing all this local delivery part, then GST 18% will be charged. But if I will be taking help from e-commerce operator, then e-commerce operator will be paying 18%, and that bill will be charged to us to pay the amount. If such services of local delivery are supplied through e-commerce operator by a registered person, GST 18% is payable by the supplier of the local delivery services, i.e. the registered person supplying through e-commerce operator. So with this e-commerce, it has been very much clear. LDS services, if we are taking services from e-commerce operator, then e-commerce operator is paying 18%. And if we directly are supplying all the, if we are directly doing all these local delivery, then 18% will be charged by us only. Now, one more very vibrant topic is that what is the tax treatment for leasing or renting services without operator? So majority of the leasing or rental services without operator are taxed at the same rate of tax as applicable on supply of like goods. So no change is proposed in this regard. The tax rate on such services will continue to equal to the tax rate applicable on supply of such goods. For example, if cars or machines are taxed at 18%, then the rate of 18% will be applicable for leasing or renting. So when you are giving rent uh, cars or machine, so any services provided, leasing or renting and all that, so services will be charged 18% only without operator, and for car and machine. Similarly, if supply of any motor vehicle is taxed at 14%, as discussed earlier, that if it is in excess of 350 cc, then rate will be 40%. And if it is in less than that, then 18%. Then the leasing or renting services without operator will be taxed at 40% or the rate applicable accordingly. Supplier of services of leasing, renting a car with operator, for example, a driver, will now have the option of charging 5% with ITC of input services in same line of business, or 18% with full ITC. So with this, I have covered up the important prospect where we have identified that some of the FAQs has been, with the help of the FAQs, department has helped us or make us understand that what exactly the and what point these changes has been made by the GST Council, and how we have to interpret all these change in the rates, and thereon effectively how we can assess them and utilize these information while filing our returns. To understand the tax rate and on what ground the tax rate will be applicable, if it is on the lower side or if it is on the higher side, the and we have also identified that the from which date it will be applicable, and how we have to handle all these changes accordingly.
Um,
Yes, Rashi.
yeah. So, thank you for the session, sir. I would just, on behalf of the entire team, I would like to extend a heartfelt gratitude to our esteemed speaker, Mr. Praveen Kumar Surana, and CA Payal Daruka for an enlightening and insightful session on GST recent amendments. Your deep understanding and practical perspective have truly enhanced our grasp of the evolving GST framework and its implications in today's business environment. Thank you once again to everyone who contributed to making this session a success. We look forward to your continued participation in future Golden Charcha events.
Thank you, Rashi.
Thank you, sir.
Mm.